Okay, we are going to get started. You guys know him. You love him. This is one of many talks that he's done. Go check them out on YouTube when you guys have a chance. Give it up. Mattheus von Guttenberg, The Bitcoin Strategy.
Hello? Did it work? Great. All right. Well, thank you so much, everyone, for being here. And thank you to our benevolent host, who was gracious enough to allow me to talk about Bitcoin after many years of begging for the opportunity. I don't know what I did to deserve it, or the options were just that bad. But we're going to get started. For those of you that know me, a lot of this should be no surprise. For some of you that don't, I'll explain a little bit about me. So, where I should stand, maybe here. So my name is Mattheus von Guttenberg. I have been a libertarian since 2008, been an anarchist since about 2010 when I was in college, and then a Bitcoiner right before I graduated. And I studied economics, got my degree, and I had to learn all the standard Keynesian, monetarist, neoclassical synthesis garbage. But I studied on my own, became an Austrian school hard money economist in the style of Mises, Rothbard, Hoppe, Hulsman, Murphy, Block, so forth. I've spoken on Bitcoin on numerous podcasts, events, different forums, different festivals. You can sort of find it online. I've written for numerous publications, Bitcoin Magazine, Bitcoin.com, on different sorts of subjects. And what I'm going to try to do here, and in general, is to elucidate Bitcoin from an Austrian monetary theory, because a lot of people, just in general, don't understand Bitcoin, one, or two, they do understand it at a surface level, or three, they understand it as a libertarian, and they understand some of the crypto-anarchic implications and so forth, but not from an Austrian standpoint, and so they make some grievous mistakes and some errors in their activism and their approach and various things. So I'm going to explain to you why my approach and my opinion is really the only one true way, and if anybody disagrees, we can go into fistfights in the parking lot afterwards. So Bitcoin is a technology, right? It's an open source protocol. It's an uncensorable private network. It's an internet native asset, and it's a solution to a coordination problem, ultimately. So it's all of these things at once, which makes it difficult to understand, and people will make comparisons about, well, this protocol died and doesn't exist, or this network got replaced by this or that, whatever. And so people make sort of unwarranted or unjustifiable comparisons with other types of technologies that match one of these facets. But Bitcoin is such a strange creature, it combines all of these, that it's hard to compare it to other things without understanding it from first principles. So that's what we're going to try to do. I'm not going to explain the technology behind Bitcoin very well, or very much, because we've all heard it 100 times. If anybody doesn't understand how mining works, or if doesn't understand how nodes work, or any of that, we can discuss it later. But we've had a bunch of crypto talks that go over a lot of this. So I'm going to stick more to the economics and more to some of the game theoretical implications of it as it progresses. So in case you are interested in some of the technology, I think Josh shared something like this in his talk. There's a huge family tree, a huge genealogy that made Bitcoin possible. Everything from earlier primitive digital cash schemes and systems to public key cryptography to various types of peer-to-peer networking protocols. So Bitcoin has been about 40 years in development, we'll say, combining all sorts of necessary items into what came out in 2008. So first and foremost, I'd like to say that Bitcoin is the purest expression we've ever found of an example of Austrian hard money. And I gave a talk about this a number of years ago at PorcFest called "Bitcoin is Rothbardian Money." And anybody that's read Rothbard's work on money, or any of the other Austrians on money, can sort of see it when it's sort of laid out a bit. But Bitcoin is essentially 100% reserve digital gold, right? So if I own Bitcoin and I send it to somebody and they send it to somebody, like, I don't have it anymore, now they have it. Now if they don't have it anymore, now they have it. Now miners' fees and stuff, take off some of that transaction, but they still go to people that spend it and move it. So there's a limited supply, and it's impossible to counterfeit. So there's lots of Bitcoin clones, and there's lots of alternative assets that are, I should have included in here, but there were a bunch of different client implementations of Bitcoin, a bunch of different Bitcoin forks, things like that. They're not accepted, let's say, at par. They're not recognized by the Bitcoin network as being legitimate Bitcoin. They're something else. And so in the system itself, it only recognizes legitimate coins part of that. So it's impossible to falsify the network with additional Bitcoins or fake Bitcoins. It is resistant to fractional reserve shenanigans because the entire idea of fractional reserve systems in a larger credit economy is that people deposit their commodity money in a bank for safekeeping, and then the bank will produce money substitutes, banknotes that recognize and redeem it at par. But there's really no limit to their ability to print those notes and then just sort of pyramid off additional credit on top of that money. But with Bitcoin, that's not necessary because you can just hold the damn thing yourself. Like there's no need to trust some intermediary bank that's going to pyramid 10 times the amount of credit on top of it or any of that. So in the sort of, ideal world, everyone would hold Bitcoin in their own sort of specific way, and there's no credit pyramiding, there's no multiplier effect or any of that from banks lending out waves of credit on top of it. So beyond this, Bitcoin is resilient and anti-fragile, which are two different concepts, but it's resilient because it's global and there's no specific way to attack to destroy it. So it's resilient to attacks, and it's anti-fragile because it's open source software, and so it can adapt and shape to the various attack vectors that have been attempted on it. And there have been regulatory attack vectors, social engineering, and other sort of economic vectors on it that have failed. And Bitcoin has low and declining inflation. Right? So there is an inflation schedule because there are more coins being produced, but up to a programmatic schedule. So I think we're at like 1.25% inflation right now, which will be cut in half in the next couple of years to under 1%. So eventually it's asymptotic. It'll peter out to zero at 21 million Bitcoin, and that's it. And all of this together is what allows for Bitcoin's patented number go up technology. So if you're missing one of these items, then it won't take and it won't cycle into the kind of monetary asset that we see today and where it's going to go. So the economics was extremely important to get right at the beginning, which is what a lot of alternate coin projects do not get right. They are built by technical people. They're not built by economists. And I don't know that Satoshi himself was an economist, but he certainly was well-read and understood these principles. And so we can talk more about tokenomics, another time if people have questions. But in my opinion, I think Bitcoin gets it about as right as possible. And I include a picture of Hayek here. I find this kind of interesting. For those that sort of are aware of Hayek's contributions to the Austrian school, he was very important in developing Austrian capital theory, and he's known for his use of the idea of roundaboutness, the idea that as a production process gets longer and more roundabout, other things equal, must be more efficient than shorter production processes. And so I find it kind of funny that 50 years later, he wrote about capital theory in the 30s. In the 80s, he gave an interview, and he's talking about money and sort of competing currencies and denationalizing money and all that. And he talks about how, I don't think there'll ever be a good money again unless we take it out of the hands of the government. But we can't take it out of the hands violently because that won't work. There has to be some sly roundabout way it gets introduced that they can't stop. And he says this in like 1987. He's about to die. He's like 90 years old. He's going to die. But it's just kind of funny the way he talks about it. So I've included sly roundabout way. 20 years later, this is exactly how Bitcoin came about, right? And a way on the internet, natively, unstoppable, pseudonymous, and so forth. So digging a bit deeper, I want to explain that there's really two major camps in Bitcoin. And for folks that are interested, that are more knowledgeable about other crypto projects, this may also match to your context in some way. But at least in Bitcoin, there's two major camps, right? There's a camp that views Bitcoin as cash. It's intended to be cash, right? And that they believe that Bitcoin is supposed to serve transactional functionality. And the goal is to create a circular economy, right? Or a sort of counter economy where, I sell my services or labor for Bitcoin, and then I'm going to spend that Bitcoin to somebody else to fix my house, and then they're going to spend Bitcoin to whatever, grow their chickens, and I'm going to get the eggs with the Bitcoin. And so we just all sort of use it amongst ourselves and step out of the surveilled white market corporate economic system and so forth. And so they want to drive that as the ideal and as the immediate sort of tactic. As the ideal, and the tactic becomes, well, you can spend and replace your Bitcoin, right? So if you're worried about, spending and just saving it, you don't want to lose all your Bitcoin, well, just buy more, right? I'm going to spend it with you, and then I'm going to buy more on the exchange, so I'm netted out to zero, right? I still have the same amount of Bitcoin, but I've affected positive economic transactions in this direction, and so I'm just going to replace everything that I spend. And there's a big focus on network effects from this perspective. Right? The idea is that the more people we can get using Bitcoin, the more nodes there are in a network, the more valuable the network becomes, right? And this is true, right? So this is the value of network effects, right? English has a great network effect, right? The more people that speak English, the more valuable English becomes because more people can understand you, right? Common law sort of works this way too. A lot of systems work this way, and the idea is that it's sort of they're trying to sort of bootstrap this, merchant adoption and getting it spent and sold and passing it around, and then eventually we'll sort of all have our bespoke Bitcoin economy, and we'll be safe away from when the Titanic sinks and all that. And this is represented, in my view, by people that supported Bitcoin Cash, people that supported I got this backwards, but people that got it backwards. People that supported big blocks and the sort of Satoshi's vision people that came off Bitcoin Cash. You guys are aware of that. Maybe this is inside baseball. The other camp views Bitcoin as an investment. And the idea is that, well, actually the price of Bitcoin is the most valuable part of it, is the most important part of it. And they want to use it as a store of value, not as a transactional vehicle to create a circular economy, right? And so the ethos is, don't sell your Bitcoin, right? Don't spend your Bitcoin. Just hold on to it. And the focus is on price action rather than on economic network effects. And the goal there is not to onboard merchants as such, but just everyday people, right? Bitcoin is savings technology. It's the best savings technology ever been created. So why don't you save your money and I'll save my money? Why don't we all use this? But it doesn't, that doesn't affect trading. It's just each person is now substituting the savings asset that they're using from dollars or stock market indices or real estate or whatever into Bitcoin. And the injunction there is to save your money. And this is represented by, Bitcoin core people, by small block type people, and what are known as maxis online. And I want to just explain a little bit that there is a virtuous cycle to all of this, but there's different paths you can take in the virtuous cycle. And so in red, I've outlined the dominant path that the Bitcoin maxi, store value type folks feel is that they want to drive from hoarding to higher price to media attention to perceived legitimacy to users to more price and so forth. Whereas the big block Bitcoin Cash type people want to actually drive the green part of the chart, that media attention and business adoption, user adoption makes it more legitimate, and that'll continue. Now, the whole schema is a virtuous cycle, so it's all beneficial, but there's a bit of a different emphasis from a theoretical perspective about what will make Bitcoin succeed from these different camps. And I want to explain, now my view on this is that Bitcoin as an asset, it began as an asset. All assets have to follow a path-dependent approach to monetization. So in order for something to become money, it has to pass through specific stages. So this is where it would behoove people to read Menger and Mises and so forth to understand origins of money, origins of purchasing power, and so forth. Money has to start as a collectible, right? If you read Nick Szabo, right, from shells to cows to salt and so forth, it becomes a store of value as more people use it for saleable trade. It becomes a medium of exchange, a more dominant one over time, and then at the end of its cycle, it finally becomes a unit of account that allows for economic and monetary calculation, that allows for cost accounting. It allows people to run a business and for the whole civilization to grow through the coordinating function that good money provides. But why does it have to take this path? Well, it takes this path because monetary calculation, being able to do cost accounting, right? Am I generating a profit or loss in my business or not? That requires a stable unit of account, right? Can you imagine doing cost accounting if the measuring stick, if the unit itself was unreliable, right? If it fluctuated 10% or 15% each day in any direction or whatever, it's impossible. This is the state of being in Argentina, or this is the state of a lot of different countries that aren't dollarized, where the currency they're using fluctuates so wildly they can't actually use it for long-term planning, extended economic calculation, and it frustrates the businesses as they're trying to run. So if monetary and economic calculation requires stability, stability requires deep liquidity. So the only way that an asset would be stable enough for cost accounting is if the price doesn't move very much when there's lots of transactions, right? So you can imagine an asset that's illiquid, like maybe Bitcoin 15 years ago, 10 years ago, when it was much newer. There were various spot markets, various exchanges, and they had little different bits of price spreads. Now, people are going to arbitrage and make money off it, so there's going to be a uniform price that's going to have a tendency to merge. But if you can imagine someone spending $1 billion to buy Bitcoin and it doubles the price, right? Or if they sell $1 billion and it cuts the price in half, that's not stable. And it's not stable because the market isn't that liquid. Right? Imagine the difference between jumping into a pool, cannonball, and all the splash and all the tumult you'd make versus falling into the ocean. Right? You're not going to affect the average sea level in the ocean if you jump into it, but you will affect the average sea level of a small pool and all of the turbulence that emerges from there. So, in order for a money to be stable enough for people to run businesses and to do economic calculation, it's got to have very deep liquidity, meaning that nobody can move the price very much, even if they throw $1 billion at it. Okay, well, how does an asset get that liquid? Well, that much liquidity, that much wealth being stored in it requires worldwide holding. So if we think about supply and demand dynamics, right, the idea is there needs to be, let's say, restricted supply of Bitcoin and then over time increased demand, and that will provide more liquidity as more hands join the table, more people put their wealth in it. But to talk about Bitcoin supply in this way is a little bit misleading because I'm not talking about total outstanding supply of Bitcoin. I'm talking about the supply of Bitcoin that people hold that they may or may not want to put on the market, right? So I have some Bitcoin. That's my supply, right? But from a deeper perspective on supply, there really is no such thing as supply. It's really just what's called reservation demand. So I demand my own Bitcoin. I have a reservation amount I will not accept before I sell that, right? So it's my demand versus everyone else's demand. So it's just a bunch of intersecting demand curves, basically. But what the deep liquidity requires is enough people feeling like, I won't get rid of this until this price is reached. Right? So they're holding out on selling it. They have independent reasons for wanting to hold it, speculative reasons, ideological reasons, whatever. But they must want to hold it and restrict it from circulation in the market. Why would they want to do that? Why would people want to hold Bitcoin when there's other financial assets, when there's credit assets, when there's all sorts of things? Well, because they believe the number will go up, right? So a lot of people speculate into Bitcoin and they hold it, not for any immediate practical purpose, but because they believe the price will be higher in the future, right? They believe that it'll appreciate. People hold stocks in their retirement accounts for the same reasons. So, but if in order for that to be true, in order for a number go up to be true, it has to follow some of the path that we described earlier. So there's a specific path to monetization, and there's specific reasons that justify each stage of that. And all of that is currently valid and true in the case of Bitcoin. But I just wanted to lay out some of the points that would allow you to see how we get to the final stage of a worldwide, stable, global reserve asset that can handle the monetary traffic of all the Exxon Mobils and all the Apples and all the huge trillion-dollar companies in the world. This has to be, right, Bitcoin has to absorb the entire global economy in order to function as the foundational unit to manage all of that monetary traffic. Do you understand? Sorry if I'm going pretty fast. I'm going to talk to you later about adaptogenic coffee because I drank too much today to get this done, and it's still working on me. So I want to explain even a bit further that the problem I have with the big block Bitcoin Cash type camps is that they don't understand the economic implications of the strategy that they're trying to promote. And so I want to make the argument that to spend Bitcoin is to sell Bitcoin. And that reasoning for that is straightforward. Spending Bitcoin to a merchant is almost certainly going to cause that merchant to convert it through a payment processor of some kind, right? Which is essentially going to dump it on an exchange, which is essentially going to sell it for that fiat in order to provide the cash out, the withdrawal for the processor, which is going to exert sell pressure on the exchange, which dampens price appreciation. Okay. Even in the ideal case, right, and this is just talking about merchants, using BitPay or whatever, even in the ideal case where we already have a circular economy and the merchant that I'm going to send my Bitcoin to intends to hold it. Like they don't intend to dump it, right? But even in that case, if I spend my Bitcoin to them, they receive it, they're not going to use fiat currency to buy the Bitcoin they want on exchange because they're already getting it from me. And so they are going to, the whole action is obviated because I've eliminated their buy pressure from the exchange because they're getting it from me. And so they're actually preventing normal price appreciation, right? So let's say I wanted to give, JD some Bitcoin for something he's doing for me, and I know he's going to hold it. But if I know he wants Bitcoin and he wouldn't get it from me, he's going to have to buy it from somewhere else. He's going to have a marginal effect, upward marginal effect on the price in order to acquire it. But if I am giving it to him and paying him with it, then that is obviated. He doesn't need to do that. So in either case, it's either directly dampens Bitcoin price appreciation by spending it to merchants that don't intend to hold it. And even in the ideal case, I'm preventing the counterfactual buy pressure that would be there if I didn't give him the Bitcoin. And honestly, my view about this approach of spending a bunch of Bitcoin and getting merchants to use it and trying to get customers to pay in it and trying to bootstrap a currency system out of this unfortunately is applying Keynesian monetary theory. The way people think about this approach, it's cart before the horse. So trying to get merchants to get started on it because that'll help other customers use it, whatever. It doesn't begin anywhere organically. It's an artificial attempt to jump to the last stage at the beginning, which won't work. So in my view, merchant adoption actually comes at the very end. Merchants will adopt Bitcoin as a unit of account, as a medium of exchange, because they themselves want to hold it, because of the organic incentives in number go up and of the other socioeconomic reasons. But you can't shortcut the whole process, say we're going to make something money by treating it as money. It's not how something becomes money. It has to follow a specific path. Some of you guys are familiar with Gresham's law, right? The idea that bad money drives out good money. And unfortunately, people don't know the rest of the expression, which is that bad money drives out good money when it is required to be accepted on par with good money. So in various schemes throughout history, from bimetallism to other types of currency restriction schemes, people will use the bad money instead of the good money if the government requires them to be accepted at the same standard. right? If I have like silver coins or gold coins, but some of them are a little shaved and clipped or they're a little bit less, whatever, but the government says they must accept it on, well, I'm going to give you the damaged coin. I'm not going to give you the actual valuable thing. Why the hell would I, right? In cases where the government does not require acceptance at par, Tyr's law actually operates, not Gresham's law. And Tyr's law is the inverse. Good money drives out bad money. That it's been hard monies that have been good store of value over the years and centuries that have won out over bad monies. It's been gold, it's been silver, it's been other currencies that have been adopted by Ottoman Empire, Byzantine Empire, Roman Empire, all that. These have all been good, solid, hard money bases. These are not paper currencies that survive through centuries. And so this understanding of how money competes with other money needs to be understood from a first principles basis, which is where I think the Austrian school has a great advantage in this sort of narrative to give and this interpretation to give. And one little anecdote that I think is, kind of funny to express the point, many years ago when I lived in New Hampshire, there was a little underground anarchist lair clubhouse we used to go to. And people would be sort of entrepreneurial, right? And they had vending machines and people would sell various kinds of, psychoactive plants and other things. And there was a guy that had a fridge that would sell water, right? Seltzers or tea or whatever. And everyone's, super into crypto, and I'd buy beer with Bitcoin and all sorts of stuff. Well, he had a bunch of stickers of a bunch of altcoins on the side of it, right? But the drinks were priced in dollars, naturally, right? $2, whatever. Pay me in any of these. And there was one time when he was like stocking the fridge, right there with it, and I was looking at it and I wanted to get a drink, and I was just joking with him, and I was looking at the list and I was like, all right, what's the most worthless piece of shit you'll accept here? Dash. Okay, I'm gonna give that to you. And he looked at me and he was like, oh, like he understood immediately the problem, right? Is that out of any of these options, I'm going to hold on to that which is most valuable to me. And if you're going to sort of accept all of them on par with what the dollar value is, I'll just give you the worst one until you don't accept that anymore. Then I have to go to the next worst one, then the next worst one, and so forth, right? So this is true. This dynamic plays out not just between altcoins and various little shit coins or whatever, but between fiat currency and Bitcoin. So if somebody is selling something for $100 to me, and I'm going to buy some good from them, and they accept both US dollars and Bitcoin, well, I'm going to give them the dollar because dollar doesn't have any NGU, right? Dollar doesn't store value. Dollar's melting, depreciating at 10% a year, 15% a year, something like cost of capital, something like that, right? So I'm going to give them that. Now, if they discount, if they say, well, I'll give you 20% discount if you use Bitcoin, now we're starting to get more apples-to-apples comparison. Now maybe it's a wash, right? But this practice of holding on to the good money and giving away the bad one in exchange won't last forever because people don't want to accept bad things. Eventually, they'll wise up and they'll stop accepting the bad one, and then they will only accept the good one. And this process has been playing out with the dollar versus other fiat currencies, right? This is why countries dollarize, right? They're essentially legally, moving over their entire basis to the dollar versus, whatever little tiny, currency that they've got. And this will continue to play out over time, which leads to a process called hyper-Bitcoinization. And hyper-Bitcoinization is essentially a rapid monetization event that Bitcoin is undergoing. Now, all things that become money go through a monetization process, but with Bitcoin, it's unbelievably fast because it's digital and all that, but because we live in an internet-connected age and because anyone can communicate and memes spread and ideas spread at the speed of light. What I'd like to share with you is my opinion that we are here on the adoption curve. This is a sigmoid curve. And so the reason we're getting 10x bubbles and 10x booms in Bitcoin is because it looks smooth. It's not smooth. Looks more actually like this graph here. but it's basically climbing, and it'll continue to 10x until we reach the plateau at the top, which is essentially a saturation phase. So once everyone in the world that wants Bitcoin has it, then there are going to be no new hands to join the table. There will be no new multiplicative effects that drive the price to exaggerate it to have 10x jumps. So on the left is my opinion of where we are on the global saturation curve, and on the right is an image I took from this great website called Clockwork Partners. Highly recommend you take a look at it. Especially if you're data-oriented, mathematical quant kind of person, super interesting. This is a graph showing U.S. investor portfolio allocation fraction. And it's a log curve, right? So at the top, we have 1, which is 100%. Next unit down is 10 to the minus 1, so it's 10%. 10 to the minus 2 is 1%. So you can see every increment in the y-axis is an order of magnitude increased, right? Look at Bitcoin. Like, this is what hyper-Bitcoinization looks like as it climbs as a percentage portfolio of investor allocations. And eventually, it's going to surpass U.S. equities, dollar-denominated credit, Federal Reserve notes, gold, et cetera. I don't know if you guys can see it very well, but these are all sort of up here in the top, 10%, 15%, something like that. This curve, like this process will continue until we get to laggards. Something like that. And then it'll peter out because you can't get more than 100% portfolio allocation in Bitcoin, guys. So now, what does that mean? Due to the properties of Bitcoin, the technical and economic properties of Bitcoin that lead to it being rapidly selected as the new champion money of the world, this is hyper-Bitcoinization, it's going to have effects at different scales. So the first people that will be interested in it will be individuals and families, right? People like you and I, right? I want to provide for a family and maybe start my own business. I'm going to buy some Bitcoin. I'm going to protect my savings and some of this. As it becomes more popular, as it becomes more successful, more stable, more liquid, so forth, companies and universities will have the same instinct, right? They may not want to start a small business. They may want to prevent inflation, right? So I have a picture of Michael Saylor here on the left as this sort of quintessential, billionaire businessman that realized, I'm holding hundreds of millions of dollars in cash in my company, and it's melting at a rate of 10% a year. That's a really bad outcome. And so, as an example, his company basically converted their entire treasury to Bitcoin, and they continue to buy billions of dollars. They even indebt themselves and take on crazy debt to buy on a bunch of Bitcoin. So they're extremely aggressive. Most companies won't be that aggressive. They will allocate a small portion of their treasury to hold a little bit of Bitcoin and this and that. Universities and their university endowments will do the same thing. Next level is going to be banks, insurance companies, pension funds. And the reason won't necessarily just be inflation hedge or exposure to appreciating price. It'll be for solvency reasons, right? These banks and insurance companies and pension funds are on the hook for billions of dollars in loans and all sorts of insurance claims, and so they need to remain solvent. And so they're going to dedicate a small percent currently to Bitcoin just to capture the some 10,000% appreciation. That'll balance out their portfolio so that they can continue to ensure and provide returns for the pensioners that live on those funds. The final level will be central banks and nation states. And central banks and nation states will ultimately adopt Bitcoin, not necessarily for solvency or inflation reasons, although those also can be true, like in the case of the United States. We can talk about that later. But for more natural and obvious game theoretic reasons, that it's a neutral non-state money. So if you are trading, if you're China and trading with another country, or if you're the United States trading with another country, the basis for that trade, the currency unit, is going to be some fiat currency. It's going to be the US dollar almost certainly. Could be the renminbi, could be the Great British Pound, could be any of that. But these are not really good choices because they privilege the nation state that authored the currency. And so while the US dollar right now is the largest traded currency, the largest asset in Forex currency swaps and pairs, it's what drives so much of the economic traffic in the world, that is a privileged position the United States holds. And other countries eventually will gravitate toward a solution like gold that didn't privilege anyone. And so they're going to start to move toward neutral non-state money. Now that might be a commodity basket, right? It might be oil. It might be gold, like, China and India buying a lot of gold. They're all making sort of bets on what would be a future post-fiat system. And my bet it'll be Bitcoin because Bitcoin's superior to all of them. And so it's sort of inevitable that more and more people sort of understand and wake up to start moving towards it. But hyper-Bitcoinization is going to play out at all of these scales simultaneously, but it's going to drive more exaggerated behavior at different units of time. So, at early adopters, it's just, individuals and businesses, and as you climb, it's little companies and so forth. We're starting to see the first inklings of pension funds and wealth funds explore Bitcoin for these latter reasons. And in my view, this is really the end of the road. So once the world or once various nations have Bitcoinized, they're always going to be Bitcoinized. And the reason for that is because money obeys winner-take-all dynamics. So various networks, it does not apply to this, right? So we can think of like social media networks, right? We can think of like MySpace or Facebook or X or Instagram or any of that. Now, these are networks. They all benefit from network effects, right? So the more people that use Instagram, the more valuable Instagram is to me as a user, right? The more people use X, the more people I can reach with my shit posting and whatever, right? But money is a little different because I can only spend my wealth using one vehicle. I can't spend it simultaneously with another vehicle. There's opportunity cost, right? So if I'm going to trade wealth to somebody for some good or service, I have to, there's only one vehicle that can be done. I can't pay JD $100 in 5 different things. It doesn't make any sense. There is an incentive for people to select the best vehicle for that, and that will end up taking all of the market share. So if you think about social media networks, for instance, there's no opportunity cost for me to use all of them at once. So I don't know if people use aggregators like what is it called, Hootsuite or other types of things where you can post and it posts to all of them, right? That is essentially, there's no opportunity cost, right? My idea, my thing that I want to say, I can publish it simultaneously across all these networks. So it's not as zero sum of a competition, but with money it is. And so, and that's because money is a competition of saleability, essentially. And there's always a single rank ordering of things that are more or less saleable. And so as a consumer, your incentive is to use the most saleable good that you have to buy whatever you want. And that's not salt anymore. That's not cattle anymore. It's not gold anymore. Right now it's US dollars and sort of treasury bills internationally, but soon it will be Bitcoin. The second reason is that Bitcoin is the sort of Nash equilibrium or Schelling point position currency for international trade, right? It settles almost immediately. It can't be counterfeited. It can't be stolen or confiscated. It's neutral. It doesn't bias anybody. And so from the point of view of international trade and countries as agents, the equilibrium position is going to be for them all to convene on this as the best currency for the properties that it has, is durable and fungible and storable, all of the sort of properties that make good money. And then from there, there's no better option elsewhere, right? So if the entire world's on a Bitcoin standard, there's no improvement to be made. No agent can make any other choice that is an improvement over that position. So if one country doesn't want to use Bitcoin and they want to use some other, go back to gold or whatever, well, they're automatically in a worse position because the rest of the world uses something now they don't use. And so once people start to operate into the optimal monetary solution, there are no better choices or directions to take. And so you can think of it as a, what's the name of it? It's a sort of a inverse prisoner's dilemma. There's a specific name for it. But it's a game theory position where everyone is occupying the best position possible, and any movement out of it is inferior, and so nobody will do it. And so this is what's going to essentially lock in a Bitcoin standard once it has hyper-Bitcoinized. And the third reason really is more of a technical reason, is that Bitcoin is open source software. And so it allows it to update as needed, right? So you could say, well, that could be true. Gold occupied that position from the 15th to the 19th centuries, right? That was the Nash equilibrium sort of Schelling point. Every country moved to gold. Gold became, the asset for international trade and so forth, and that's true. But gold was obviated by superior technology. Well, like it or not, right? Which is paper notes backed up by the force of the government on a fractional reserve system and so on and so forth. So that technology solved a whole bunch of problems gold couldn't solve. Well, but you can't update gold, right? You can't upgrade gold. You can't do any of that. It just is what it is. But Bitcoin can be, right? So if you look at things like hash time lock contracts, they allowed for Lightning as a layer 2 to be built, right? Lightning allows for Taproot, which is a layer 3. Taproot allows for colored coins, tokenizing real-world assets, stable coins, all sorts of things. So there are layers that Bitcoin allows that gold, for instance, wasn't possible unless you consider the sort of managed gold exchange system in Bretton Woods. You consider that a layer 2 to gold, I suppose, but real shitty one. What competing coin projects miss, in my opinion, and this is true for Monero, this is true for privacy coins, this is true for Ethereum and other things. I don't think Ethereum's really trying to be money, so it doesn't quite apply, but competing coin projects miss that they don't just need to be a little bit better than Bitcoin, they need to be like an order of magnitude better. Like they need to be better than Bitcoin was to fiat currency. And the reason for that is because people are going to need an enormous reason to move out of the Nash equilibrium position of using Bitcoin. Just like we're moving out of the Nash equilibrium position of using fiat currency, right? Everyone uses fiat currency. Oh, it's the best, largest trading currency in the world. Why would you ever use something else that limits your trading potential? Oh, because this thing actually doesn't melt at 10% a year. Oh, because this thing actually can't be taken from me. Oh, because this thing doesn't need a legal identity for me to control this asset. Oh, because, right? So an alternative to Bitcoin, for it to succeed over Bitcoin in this future world, won't just need to be a little faster or have, process more transactions or to be a little bit more fungible than other coins are. It's going to have to be a complete paradigm shift that's superior to Bitcoin in an enormous way, the way Bitcoin is over to money, over to conventional fiat money. What this leads to, ultimately, is the end of central banks and nation states as we know them. So the worldwide use of Bitcoin or other crypto destroys unstable fiat currencies via constant speculative attacks. And what a speculative attack is, it's an attack on a currency by investors that are choosing a superior currency and undermining the value of the weak currency in a virtuous cyclical process. So if you think about, Saylor talks about this with Argentina, for instance, that what people do in Argentina is they will get US dollars however they can. And of course they have to use pesos and trade and buy things with them, but nobody saves in pesos, right? But what investors did in Argentina in the 80s, which actually caused a huge devaluation and the sort of debt collapse of the Argentinian peso at the time, was that they would borrow as much Argentinian currency as they possibly could, collateralize on it, just get as much as you possibly can, and then immediately convert it to dollars and hold on to the dollars. And then because of the different purchasing power and inflation rates, Argentinian peso is going to decline. They're going to make a real return on those US dollars they held, right? but they're out of they're stepping away from the collapse of the Argentinian peso because their investments are in dollars. Okay, well, they realize those gains. They sell those dollars for pesos again, and then the cycle repeats. And so they're actually using a superior currency to drive a weaker currency into the ground and destroy it for no other reason than their organic economic self-interest, right? It's not ideological. It's just, I'm trying to grow my capital and I'm trying to move, into an asset that's not going to be destroyed. But in so doing, they are speculating that this currency will be better than this currency. And if they're right, then that speculative attack is successful, which widens the gap between the two currencies. And eventually it widens so much that one currency fails. And Argentina had to dollarize to save their fiscal position and all of that. So through these little personal investor decisions of people choosing Bitcoin over fiat currency and, borrowing as much dollars as they can, right? I've done this, right? Like, does anybody here hold Bitcoin and have any debt at all? Does anybody have any fiat debt, but they hold Bitcoin? Okay, then you are conducting a speculative attack on the US dollar because you are using Bitcoin to improve your real economic gains and borrowing additional dollars, which increases the supply of the dollars, which drives the price down, but your demand for Bitcoin drives that price up. So there is a wedge being driven between the two, and that wedge is going to reproduce the Argentinian situation for all fiat currencies. So this process will end central banks because it will destabilize an already fragile, pyramided 99-to-1 fractional system that they're all running the world over. And that is ultimately going to force them to go bankrupt and declare insolvency or try to print new money like after the Weimar hyperinflation, they had to come up with some new currencies and all sorts of stuff to create new currency out of it. But ultimately, the current economic system of fractional reserve banking that we have today is not viable in the face of a 10x competitor like Bitcoin. So with the end of central banks, we'll have the end of inflation. I don't think I need to explain anymore. With the end of inflation, we will have honest taxation. Right? If governments can't print money to finance their welfare programs or war programs or all sorts of things, then they will have to actually come to you and say, hey, it looks like your tax bill, please pay me. Oh, and you too, please pay me, right? So that is going to collapse government because honest taxation will lead to small or no government, right? The gold standard only allowed governments to spend 5% or whatever of GDP, some 10% of GDP. Like, you look at the size of governments 100 years ago when they were limited by literally to tax the people with the gold that they wanted to finance, they were a quarter of the size of what they were today. And as we all know, small or no government will bring peace on earth and goodwill to all men. And so really, nations have a choice to make. They can choose to fight it and die, or they can choose to embrace it and probably still die. So the path that I've described here doesn't not come true if nations are more forward thinking than others. Right? So this is going to happen regardless of what nations adopt or do. Now, they can, in the ideal case, if you really care about government existing, if it's really important to you that government sticks around, the ideal case would be for them to radically descale as quickly as possible, move to a Bitcoin standard, and try to argue the case that they're going to claim 4% of GDP to clean the streets or whatever it is. That might persist. Like, you might have little Liechtensteins. You might have little, smaller micronations that can get away with honest taxation, that people do believe in a social contract and they're willing to pay and all of that. But it's going to be so small. And frankly, I don't think it'll happen because politicians and regulators and presidents and so forth will never accept limits on their power. And in most ways or others, they will fight it and then they will die fighting it. So I really don't think any government is going to be forward-thinking and responsible enough to embrace this new path. And so I think the future, given something like Bitcoin, is a crypto anarchy, is going to be a mosaic of small little regions that all compete very tightly on talent and capital. This is the end of my talk. A little bit shorter than others. I hope you enjoyed it. I have resources on here. If you'd like to learn more about Austrian monetary theory, if you'd like to learn more about Bitcoin and some of the important publications that explain out how they merge, they're here. If you have any other deep questions, there were 100 rabbit holes I could have gone into that I did not want to. So please ask questions, come find me afterwards, and I'll do the best I can to help wrap your brains around it.
Do you want to do some questions now?
Let's do it.
So I think everybody here loves your angelic slide where it just becomes utopia and everything,
Yeah.
like anarcho-copy utopia. And that's also with the asterisk that, like, I can't imagine the amount of money and power that Bitcoin has already been offered to sell out. But how do you, how does it not become compromised or taken over by the state in the future? And do you have total faith in that?
Well, there's nothing to compromise, right? There's no Bitcoin company. There's no Bitcoin organization as such, right? It's a peer-to-peer network. It's you and I and all of us that hold this on our devices, and we choose to spend it and create an economic network or not. So I don't even know what it would mean for Bitcoin to be compromised by the state exactly. I mean, I hear people say that. It's like, oh, Trump's into Bitcoin, and now it's the government is going to own Bitcoin, and now everyone is going to get rugged by the government, whatever. Like, that doesn't really make sense to me, because like you wouldn't say that government compromised gold as such. I mean, they sort of like arrested anybody that had it, and they forced you to use this whole system on it or whatever. But that's because of limitations with gold. Gold had to be physical. Gold is obvious. You can't hide it. It can be taken, all these things. So, I mean, if you have like a specific example or some idea of some nefarious external agent, corrupting the spirit or the functionality or the technical ability or something about Bitcoin, I'd love to hear it. But frankly, I just don't think that there's any way to grip it. Like, there's nowhere for them to grab it. Does that make sense?
It does. Does that make sense for like the other cryptocurrencies that are like, Doge?
It depends how decentralized they are, right? So if the coins are very centralized, if they have a founder, if he has a real name, if he's got a place he lives, well, that can be, the arm can be twisted. But it's not clear whose arm you would twist to make Bitcoin into some kind of, vehicle, some kind of demon or hell being or something like that. So I guess I don't have faith so much as I just understand the ways that governments typically try to control these things, and that it's not applicable to Bitcoin.
Yeah, it's sort of a follow-up on Kristen's question. When you were talking about the speculative attack on currencies, weak currencies,
Yep.
I mean, typically what governments do then, if it's dollar versus Argentinian peso, is the Argentine government will just put capital controls in place to prevent you from getting dollars or do that. Now, when it comes to Bitcoin, of course, the only thing they can do is at least control the entry points, do KYC, and control the exit ramps. How do you see that speculative attack be, invulnerable to this sort of control?
That's a good point. The on-ramps and off-ramps are going to be controlled, right? They're going to be surveilled. You're going to have to, they're going to know it's you. Please pay taxes. We saw that you made this sale and all that sort of thing. But that is, in my opinion, only that's a necessary, the idea that we're using these exchanges to do currency exchange, that's only valid for a small portion of the life cycle. Like, that won't be true at the end of it. Now, it's true now, and so it does limit the free flow of capital that would be optimal for the true ideal money to emerge. So you're right. There's roadblocks in the way. People are going to get scared. They don't want to do this. The government says it's illegal. I'm going to have to pay 400% capital gains tax. I'm not going to do it. Well, but that still doesn't completely cut off the local exchanges, people in person trading, selling Bitcoin. And I think also that the appetite for that kind of tyrannical control declines the better Bitcoin performs, because Bitcoin, like the incentives of it are so genius. The way it works is so genius that even people in government are going to want to buy and hold Bitcoin. So it will end up capturing them, like Invasion of the Body Snatchers a little bit, right? So if you're, a regulator or central bank or government agent or whatever, and you on the sly hold a bunch of this money that nobody knows you own because it's more or less sort of private, then you are going to resist policy and laws that are going to impact your own economic progress. So the more it succeeds, I think the less appetite there'll be for that kind of government policy. Sorry, because the people that make up the government are themselves rational agents, to some degree. I don't make choices here.
So I think I very much am in alignment in the economic sense of why Bitcoin makes so much sense and inevitably should win. I think, though, more on the technical side, I wonder if manifestly it can be capable of doing some of these things as things scale. So like you can imagine hyper-Bitcoinization that the whole world is using this.
Yep.
So there might be technical limitations as to why Bitcoin isn't practical anymore. But more so, I think what I'm actually worried about is right now this assumes that our peer-to-peer, like we want to trade some Bitcoin, right? It's not really peer-to-peer. We have to get the entire rest of the world involved with Bitcoin network to come to consensus that our peer-to-peer interaction was correct. So here we are assuming that we live in a world that has global internet access for everyone that isn't potentially hostilely tried to be controlled. So I'm much more worried, rather than the government coming to try and coerce some monetary side of things, saying like, hey, we've got all these cybersecurity problems. Now we have to have firewalls around everything, and maybe we have to stop you from doing anything with this particular network. So.
Those are good points. I think in the first place, the question is answered by additional layers on top of Bitcoin, right? So this like Bitcoin only moves 7 transactions per second and all the throughput, whatever. Like this hasn't been true for 7-8 years now since Lightning, and maybe even other side chains and Liquid and other things that allow you to offload all the transactions onto a different layer, and then the settlement stays at the lower layer. So that's viable. I'm sure there's other novel, architectural arrangements that you could solve that too. The other point that you made is interesting, but I think that it's not viable in the face of the global game theoretic position. So if you think about nations adopting laws or regulating Bitcoin, not from a monetary standpoint, but from a technical standpoint, from an internet access standpoint, or, hey, we're going to do packet inspection and make sure these are not Bitcoin transactions that you're sending and all these things here, that's going to hurt those nations more than it helps them. And there's going to be a reckoning eventually when a nation is locked out of the global economy because all the sorts of other countries are using this. The citizens of those countries are not going to tolerate that for very long. And so it's the same thing with the internet. Like, is the internet chopped up across the world in different regions? Sure. Can people still get around it with things like VPNs or whatever? Absolutely. So I think that the sort of like circle the wagons, we're going to create our own North Korean autarky and nobody's going to, like, that's just not going to play out. And even if it does in individual cases, you would need more than a 50% of the world to want to do that for it to work as like a cartel. Like, it's just not going to work.
I guess the last thing I'll conclude with then is thinking that your core state counting all the states dissolving because Bitcoin is one and the state can't exist in that. So if we really do destroy nation states as a thing with Bitcoin, now we have hyper-fractionalized coordination. How do we have a global connected internet with millions of different microstates? Like, I don't know. It's just a fun thought experiment, maybe to.
Yeah, I mean, I don't see any problem with it. I mean, how would we all speak the same English language if we're all a bunch of microstates? It doesn't seem like it's a problem to me. I mean, it's just a protocol. So people, we're not going to stop using TCP/IP just because you're in Canada and I'm in America. If I'm in this city or that city, we don't use TCP/IP. We use some other defunct internet protocol. So.
Okay, China. I've got a question about China.
Sure.
I don't know what the status is with the rules in China with Bitcoin. I know at one point the government there said you can't do Bitcoin, and then they said they can. Is it right now they can? Is that
I don't know. I
Well-
think the mining may be banned, but like
Maybe it's mining.
holding it is not or something. I don't keep
Well,
up to
the-
that much.
the reason why I ask is supposedly they're 1/5 of the world's population. I don't know. There's reports out now that say they might be more
pretty
like
close to that.
400,000, but
Pretty
or
close to
400
that.
million. But anyway, I'm just curious if when countries just completely ban it and then they unban it like they did I think a couple of years ago. Did that affect the value? Like did we see any spikes? Was China involved in that?
I'm sure it did, but what that actually affects more directly is network security,
Right.
right? Because when they banned mining, hash power fell off a cliff. But it recovered almost immediately because those Chinese miners moved into Kyrgyzstan or Russia or into the United States. And they spun up the machines again, and hash power restored almost immediately, within weeks or whatever. But even when China went offline to ban Bitcoin mining, it took the security of the network in terms of hash rate took a huge hit, but that recovered immediately. Now, is that itself, like price is a derivative of, network security. So like in this slide, for instance, that's down here, right? So security of the network is a function of total hashing power. So if China's offline, it cuts it in half or cuts it in a third or whatever. That's going to affect security. It's going to affect legitimacy. It's going to affect price, a lot of these things. But it's not something that you can point directly to. So this is always a challenge with doing financial analysis, like, doing post hoc sports analysis on Bitcoin.
Yeah.
Why did the price climb, right? The United States, literally the president of the United States in all of his administration said, we fucking love this, but we're falling in price.
Right.
Like they're going to buy as much as they can, but actually the price is declining. So like, who knows?
Right.
Like, I don't know what governs the price.
But
That
it's
to
open
me,
source.
huh?
But it's open source, so we could read the code and see if there's somewhere in the code that would determine the price. I mean, it's supply and
Nope.
demand.
Nope.
Not
The
so much?
price is not the price is not built into the software. The price is an organic function of people wanting to sell it or trade it with each other. So it's not hard coded anywhere.
No,
It's just
I don't
it's
mean
a free market supply and
Okay.
demand situation.
Okay, interesting.
Okay, I got a question for you. I actually had a lot, but I had to decide which one I wanted to ask you. So basically, I feel like the end of your talk is sort of more or less the Bitcoin standard thesis, right? That the entire world is
Sure.
going to move on to a Bitcoin standard as
Sure.
all other monies fail.
Sure. Yep.
So I see that as one possibility, but I feel like the other possibility is a CDBC forced by either one massive government or all governments to different extents. I believe there's anywhere between 30 to 80 different CBDC projects across the world trying
Yeah.
to be pushed right now.
Yeah.
So I feel like over the next decade, that's almost the giant global fight is freedom money or absolute state control money.
Yep.
And we could be some, hodgepodge between the two, but I feel like they're absolutely going to try to push some form of CDBC, whether that's one they make or whether that's a stable coin that's even Bitcoin backed, something like Tether.
Right.
What do you see as the likelihood of that, and how can we combat that?
That will almost certainly happen. So I think that there will be attempts by nation states and central banks to create central bank digital currencies. They're going to tie them to identity, tie them to social credit score, tie them to taxes, tie them to something like that. And they're going to try to, make their money on the blockchain, but not Bitcoin, something like that. So I think that's going to happen, but I think they're going to fail for the same reason that fiat currency fails and that other altcoins are going to fail against Bitcoin. Because these CBDCs are just altcoins. Right? They're legally protected and government enforced and, whatever altcoins, but ultimately they don't have any of the properties that make Bitcoin the champion that it is. And so it's not a fundamentally different contest. Like the contest between Bitcoin and fiat currencies is not fundamentally different than the contest between Bitcoin and CBDCs.
So a quick follow-up to that.
Yeah.
Do you think that Monero might have a significant role in playing for people who need privacy in totalitarian regimes?
Yeah.
And could you look at Monero as a potential layer 2 to Bitcoin?
Monero is definitely useful for people that want privacy in oppressive regimes or just privacy in general, right? Like Monero as a layer 2 to Bitcoin, do you mean like technically, like it gets pulled onto like a drive chain on top of Bitcoin somehow, or do you just mean like I'm going to use this for this stuff and I'm going to use this for this stuff? And
Yeah, more just you could atomic swap into Monero, do your private transactions there, and then atomic swap
Yeah.
back into Bitcoin for long-term savings.
well, the thing is that in order for currencies to maintain value, they have to be held. People have to have reservation demand. They want to actually maintain and hold it for a long term. If a currency is only being used for spot transactions and then people dump into the safe thing, the value of that currency will collapse and it won't be usable as a transactional vehicle anymore. So the reason that Monero has purchasing power is because people want to hold Monero. They believe it will be the successor. They believe it'll be the champion. They believe, or at least for a period of time, they want to hold it, right? But if that weren't true, if it were the case that nobody had any good prognostications about Monero, but it just existed on the internet, well, it would be a penny for a coin, but then that can't actually affect, like that's like a tiny vehicle. It's like I'm trying to, move a shipping container worth of stuff in a baby stroller. Like it just wouldn't work for that purpose anymore. So I think that any of these coins to serve in these specific transactional functions or anything else, they have to have people that believe in their success and that are willing to hold them and speculate on them. But if that's like not true, sort of by definition, then those coins can't serve that function.
My question is about government adoption.
Yeah.
We've seen it locally. I know our wonderful libertarian governor loved a virtue signal about how we accept Bitcoin to pay your taxes.
Yeah.
We see it internationally. I know you had what's his name up there? Ecuador's president.
Bukele, El Salvador.
Yes, him. El Salvador, excuse me. Not legal. It's no longer legal tender there. But what you are seeing is the government adopting it as something that they hold on, as a form of currency that they are holding, not currency, but money that they're
As an
holding
asset.
on to.
Yeah.
As an asset, correct.
Yeah.
What are the odds that we could see some nation states continue to hold on to it and use it to more or less generate more or use it more as more of like a investment opportunity, so that way they can kind of
They will.
They will.
Yeah, and that's actually currently happening, or it's at least in the works. So I didn't include it in here because it's one of the 100 rabbit holes to go down. But El Salvador especially, they have been floating the idea of volcano bonds, basically, where people will buy bonds from the government that go into Bitcoin mining, and they get free geothermal energy from the volcanoes to do the Bitcoin mining. So there's some kind of a scheme that they're using. And I remember reading about in the Trump administration, they're floating the idea of bit bonds, which is basically another kind of government financing scheme where if you buy government bonds, you buy T-bills, I think the current idea is like 90% of that revenue goes to paying down debt or goes to normal government financing, and then 10% of that they're going to buy Bitcoin. And then you get interest payments on the bond, and you get your capital, you get the principal return at the end, and a portion of the Bitcoin that was purchased through the Bit Bonds program comes back to you as the investor. And so what that proposal is trying to do is it's trying to hitch government financing on the rocket ship to the moon and solve the collapsing debt crisis, solve the deficit problem by bringing in a bunch of investors that care about Bitcoin and sort of using Bitcoin as like the uranium in a nuclear core to drive energy to get the government out of debt. So that is possible, but that's no different than any individual one of us saying, hey, I'm going to put 10% of my income just aside to Bitcoin, and then in a number of years, I'm going to sell and pay off my car debt and car loan and all of that. So I think governments will do that if they are more forward-thinking, right? If they're not retarded socialists like Europeans and so forth, then they will probably but that motivation is going to be increasingly in the heads of all sorts of central bankers and treasury secretaries and all of that, because you just can't deny its trajectory. So it won't save them ultimately. They'll still collapse, but it'll be like a neat, orderly collapse, like a controlled demo, not like a total explosion.
You mentioned the dollar devaluing at about 10 to 15% a year.
Yep.
So we all know the CPI was changed back a couple decades ago, and it's now designed to understate inflation. And obviously, it doesn't come anywhere near that number that you mentioned.
Right.
Is there anything any measure that you trust and like think is accurate?
Yeah, there's a great website called Shadow Stats that you can look at that looks at inflation metrics using the old standards, and they calculate other types of assets to come up with a true inflation. I haven't looked at Shadow Stats for a while. I don't know what they're doing post-COVID or how that all got worked out. But there are alternative indices that you can use if you don't like CPI because it doesn't include housing, energy, food, et cetera, et cetera. Trivial. You can also look at it in the backwards way, right? So, in my view, from the Austrian money view, inflation is a function of enlargement of the money supply. Now, there can be monetary inflation without that in really weird, contrived circumstances where demand for currency collapses, but the supply is still, there's some weird cases, but in most cases, it's just increasing supply of money leads to a proportionate reduction in the purchasing power of money, which is what we call inflation, right? So, but if you track growth of M1 or M2, you can actually see, that's probably a good proxy for the true inflation rate. Right. Another example would be looking at historical stock market returns. Right. What is the S&P 500 doing? Right. What are the Dow Jones doing? Because these are proxies. These are places there that money goes immediately. Sort of a Cantillon effect type situation. Right. So you can look at how rapidly they're growing as a proxy for how much money is getting injected into the system. That's sort of what Michael Saylor is looking at when he says cost of capital is 15%. He's looking at what's the opportunity cost of borrowing money to put it in the stock market that I could earn if I did, and it's something like 10 to 15%. So I think if you were to take a mix of any of those heuristics or any of those proxies, you'll get double-digit inflation. Maybe it's not 15, maybe it's 12, maybe it's 17. I don't know, but it's certainly not 4 or 6.
Cashew, do you have any? First of all, thank you. This has been really cool. But I'm curious if you must know about Cashew.
I've heard of it. I don't know what it is.
It's a bearer bond. I think it's it's a bearer bond instrument.
Okay.
E-cash.
Okay. Cool.
And the reason I bring it up is because I did one transaction with it, and I didn't need an account. All I needed to do was look at a QR code with one of these devices.
Yeah.
I didn't need to be tracked. I had privacy using it. So
Cool.
for the mix of Bitcoin Cash or the rift between Bitcoin Cash and Bitcoin,
Yeah.
I would love to get your feedback on Cashew.
Well, I guess I don't know enough about Cashew. I mean, you don't need an account to use Bitcoin either. So I'm not sure what the advantage is that you have that you're describing. Nope. Yes, but that's not an account. It's a cryptographic key. Yeah. Oh, it uses Bitcoin. Is it a layer on Bitcoin? Oh, okay.
Let me
That's
let me
cool.
jump in real quick. Cashew is eCash based off David Chaum's original work. So
Okay.
the primary point of it is to create basically like a Bitcoin mint that would be privacy focused. So it's the highest end
Oh,
privacy.
Chaumian Mints type stuff.
Yes, but
Gotcha.
it's highly custodial but very private, and that's one solution. There's
That's
multiple.
cool. Yeah, that's cool. I mean, there's going to be all sorts of solutions that allow people to use Bitcoin and have additional functionality built on top of it, right? So there was some stuff that came out many years ago called confidential transactions that was implemented in certain Bitcoin client implementations that did a lot of the privacy obscuration type stuff on the blockchain. Lightning did a lot of obscuration itself. I think Liquid has its own private, way that it guards. I'm not sure. Space is just exploding. So I guess I'll look more into it. But is it like based on Bitcoin, like inspired by it, like based on a true story kind of thing, or is it like literally using Bitcoin units in its movement?
It's basically a Bitcoin layer 2, but in small situations.
Cool. No, I think it's great.
Small private mints.
I think that's a great idea. It's like a federated mint kind of system. Yeah, I don't think it's going to be ultimately the right architecture, but hey, man. Any innovative ideas people want to do to layer additional functionality on top of Bitcoin to make it more private, to make it faster, to make it easier, whatever, I think it's a great direction.
I'm going to ask the last question.
Yeah.
Scaling. So obviously that's a big topic in Bitcoin, always has been, very
Yeah.
contentious.
Yeah.
So in your talk, you're kind of talking about how when we get to Bitcoin hyper Bitcoinization, everybody will be using it. How are we going to deal with scaling at that point? Because I think most metrics show that even if everyone's using Lightning, it's 200 million people that could use it simultaneously. So it's well below Visa, even with Lightning, if we get mass adoption of Lightning, and Lightning has a lot of other problems. So do you think other solutions are needed? Do you think that maybe there's an argument to be made for a block size increase or a dynamic block size? I know Jameson Lopp has actually advocated this recently. I think a few others are starting to advocate that. So what are your thoughts?
Sure. I'm not opposed to a block size increase in principle. The problem with block size increases is that they, at least back during the block size wars, I was there, Gandalf. I remember the block size wars. The problem is that at least those proposals entailed unacceptable design trade-offs. And so like doubling the block size or 10xing the block size or making whatever has huge implications on bandwidth, has huge implications on ability to process transactions, so forth, in terms of how decentralized the currency network is. And so there are some design principle trade-offs, which is why I think the small block folks won, because they were holding on to small blocks as a technical means to maintain decentralization. And I think that was the sort of implicit trade-off that was being argued. I don't have a problem with larger block size. I think that's probably viable given increased technology, given increased connectivity, storage space, things like that. So I don't think it would all necessarily entail some bad design trade-offs. I think Lightning is a pretty good scaling layer, at least for now. But I guess I'm sort of confident that these problems will be worked out. And so I don't think Bitcoin can climb to being globally saturated if it's unable to meet that. So if anything, it'll hit its head on the ceiling, right? And sort of get halted until somebody comes up with something like federated Chaumian mints or comes up with some kind of novel solution. Then it's like, okay, we're going to do it this way and go. Another alternative is that people, in some sense, might go back to banks, right? So if banks hold a bunch of Bitcoin and they have Bitcoin attached to various accounts and the asset, the reserve of that account can be cryptographically proven that it's still there, right? Then the bank note that I use is a perfect money substitute for that Bitcoin. And so you might not have every individual person with a Lightning wallet sending Bitcoin back and forth. I think would probably be the ideal, but you might be able to, right? If I take the position that 200 million is the limit, whatever, that might just be enough for businesses and banks and various things. And maybe there's 100 people under that are hooked up into it by some kind of cryptographically provable money substitute system. I don't like how gold was back when it was honest. Like that's possible. That's not as appealing to me, of course, but I think that there's historical solutions and novel solutions that will continue to push the frontier of how many people can use this and it still works.
That's our talk. Give it up for Mattheus.
Thank you. Thank you.